Welcome back to this Moneycontrol live stream. You're watching Closing Bell with me, Nandita, Khemka.
And I'm Yatin, Mota.
Well, Yatin, it's a good hangover that we can see on the screen from Christmas, because we have, of course, stuck to the color green and that splashed across the screens. Friday was a extremely volatile session, but we managed to end Friday, on the gaining side, even though we snapped out of a 7-week winning streak, right? But today we have extended those gains, and in fact, the Nifty just under that 21,500 mark, it was almost a triple-digit kind of a gain coming in on the index, and it's the last week of 2023 and we have started on a strong footing, and it's heartening to see that 21,450 is the kind of level that's that we are sticking to right now. Broader markets outperforming as well, mid caps in particular, that index was up somewhere around 0.7%, advanced decline ratio in favor of gainers, and if you look at sectors, most of the sectors were in green barring the IT pack. So you have the likes of autos, metals, pharma, energy. These were some of the pockets that did extremely well today, but IT pack was out of favor given the fact that we saw Infosys emerge as one of the top Nifty losers today on the back of news flow. We'll be talking about that in just a bit. But aside of that, if you look at the Nifty gainers, Divi's Labs, that stock was up 5%. Hero Moto, 6-year high, Yatin, among the top Nifty gainers. NTPC, as we know, all these PSUs have been running amok. So NTPC extending those gains, M&M and Wipro. Of course, on Friday, we saw a 7% rally coming in on Wipro. Of course, there were some rumors. The stock started out on a weak footing, but, it managed to snap its, losing trend today and edged back into the green. On the losing end, Infosys, as I mentioned, Bajaj Twins, TCS, HDFC Life, Tata Motors were among the losers. But Yatin, mid-caps, lots of mid-caps, gaining and, in fact, moving in today's session. The likes of BEL, Mazgaon Dock, all these defense stocks,
all of these stocks are at record levels, and clearly there is another level of rally in these defense PSU stocks. Yes, the momentum really continues for, defense stocks, given the fact that the order inflows has been quite strong. BEL, obviously, Nandita will talk about it, that stock in detail. But other gainers being Castrol India, that stock was up 13%. Navy Lignite, that stock moved 12%. Alkyl Amine, Balaji. In fact, all of these chemical stocks, be it Deepak Nitrite, Gujarat Fluoro, SRF, all of these stocks were doing well in trade. Clearly, it was a day of chemical stocks as well. What was not doing well is RBL Bank and, RBI's warning letter with respect to the credit card business of, Bajaj Finance and RBL Bank did not augur well. This was a CNBC TV18 source-based information post with the stock tanked nearly 4.5%. Keynes Tech, VMart, MTAR Technologies were the other stocks which were languishing in trade, but clearly defense stocks stole the thunder, wherein BDL is now almost up 80% from the recent lows. Stock is up 8% today. Kochi Shipyard also moving by nearly 6% in trade.
Interesting point, Yatin. You mentioned about specialty chemical stocks doing well, Alkyl Amines, Balaji Amines and all those stocks. I was talking to Ambarish Valiga in the morning and I asked him what's there on his shopping list as we are heading into 2024. He did point out that pharma could be one pocket that he would look at, given the fact that, of course, we have seen some bit of a surge in COVID cases and that remains a risk. So that pocket, and aside of that, he mentioned specialty chemicals as a pocket because, a lot of optimism around the sector after a long lull that we saw when it comes to this particular sector, right? So that's one pocket that some experts are really betting on at the current juncture, the specialty chemicals pack.
Absolutely.
But with that, let's take a look at some of the stocks that are on our radar this afternoon, starting with Infosys. Among the top Nifty laggards today, important to note that IT stocks have been running ahead of fundamentals. That's being pointed out by experts. Ever since the Fed has mentioned that they may look at rate cuts in 2024, we've seen a very strong rally coming in on IT stocks, wherein the IT index had moved up quite a bit. But of course, there's negative news flow around Infosys, which is something that weighed heavy on the stock today and dragged the entire IT pack lower. A global client, a global customer has terminated a $1.5 billion contract, AI contract. The company hasn't really named, whether this is an existing client or a new client. This was one MOU that was signed back in September, $1.5 billion AI contract that was supposed to be spread over 15 years. This has been terminated, and the company was supposed to provide enhanced digital experiences along with modernization and also provide AI solutions. Now this stands terminated. The interesting part is that that among the Q2 deal TCVs, Infosys hadn't really taken this particular deal in account. The deal TCV for Q2 was somewhere around $7.5 billion for for Infosys, and it had excluded this particular deal. But the major concern is if the interest rates remain high, there could be more deal cancellations going forward. So even though there's a lot of optimism around rate cuts in the US, there is this particular risk that is being flagged by experts. And let's not forget that we have seen quite a lot of high level exits at the company over the last 1.5 years, right? And that has also been weighing heavy on this particular company. If you look at the stock movement, Yatin, on a YTD basis, the stock is up just about 1.5%, wherein the IT index is up somewhere around 20 to 24%. So that means this company has this stock has really underperformed. And going forward as well, if the rate environment doesn't turn favorable, and if IT stocks come under pressure, given the fact that Infosys has more weight on the index compared to a TCS, the going for IT stocks may get tougher. But the bull case here is, we are expecting a rate cut by as early as March. If that happens, then of course the outlook on discretionary spending will improve, and that will bode well for IT stocks, right? And analysts have also been pointing out that valuations are below the long-term averages. So that's one reason why analysts are, advising buying into some of the large cap IT names. But we'll have to see, whether or not rates actually start coming down, because the risk of deals getting cancelled, that is something that the street will keenly be watching out for.
Absolutely, and Infosys is one stock which clearly was underperforming the entire IT pack today. But what was doing well today on the back of brokerage report was JKumar Infrastructure. Now, JKIL, as they call it, CLSA has increased the target price, nearly doubled in fact the target price from 385 to 720 rupees per share. With the target price of 720, CLSA believes that there could be some substantial upside in the shares of JKumar Infra moving ahead. Obviously, the shares hit a 20% upper circuit in trade today. Last time when I checked, the stock was up nearly 18%. Now, the urban capex, including the metro train, construction which is going on in Bombay, JKumar Infra is a beneficiary of that one. In fact, if you look at FY24 year to date, their order backlog is up nearly 114% year on year. So quite strong urbanization theme is how you play JKumar Infra. More importantly, if you look at the climate resistance urban infrastructure as well as the growth of top line moving ahead could be quite strong according to CLSA for JKIL. In fact, they expect the revenues to double from the current levels, and the stock trades at good cheap valuations. In fact, CLSA has raised the EPS for calendar year 2025 by 11%, assuming higher order inflows for urban development. Obviously, it's a regional player. Most of the orders come in from the Mumbai metropolitan region and the Maharashtra government, but still it is a sizable player. Probably winning those large metro rail orders have been helping the company gain the order visibility in the near term, and probably after the brokerage coverage and possible earnings upgrade moving ahead, the shares of JKIL turned quite strong in terms of uptrend for the trade today.
That's true, Yatin, and all these infrastructure stocks have also been on analysts' radar. That is one theme that could play out, once again in 2024, shifting away from consumption, given the fact that, we have seen these stocks underperform quite a bit. But, keeping with CLSA view, CLSA also came out with a report on Bharat Electronics. Now, this stock, of course, hit a fresh all-time high in today's session. In fact, on the back of a fresh order win, as well as this upbeat outlook by CLSA as well. So, the company has bagged an order worth 678 crore rupees, of which 445 crore rupee order is pertaining to the UP government's next-gen, emergency response system, UP Dial 112 project. Now, the company is supposed to provide hardware, AI-based software tools, as well as cyber security solutions for this particular project. If you look at the company's outlook that it had given very recently, it said that it was anticipating somewhere around 25,000 crore rupee worth of order wins in this current fiscal, and it has already backed 26,600 crore rupee worth of order, Yatin. And in fact, CLSA has also been pointing out that the company is on track to beat its order inflow guidance of 20,000 crore rupees, which it certainly has, because so far in this fiscal it has already bagged 26,600 crore worth of orders, right? So, in fact, CLSA says that as the government brings forward its Make in India orders, because, Q4 onwards, orders are expected to slow down in the run-up to elections, right? So, a lot of bringing forward of these orders is something that bodes well for the company. Also, the fact that, CLSA says that it is observing a rise in the share of electronics when it comes to defense equipment. That's something that bodes well for this particular company as well. So CLSA has a buy rating on the stock. Target price has been raised to 207 rupees versus 157 rupees per share. In fact, EPS estimate has also been raised by 5 to 7%, for the calendar year 2025-2026. And if you look at the stock performance, Yatin, stock is up over 80% on a YTD basis. Yeah. And experts, if you go by what experts have to say, there's still more steam left to this rally in defense equipment stocks as well. So BEL, along with the stocks like Mazgaon, Dock that have been doing very well, is something that investors must keep on their radar now.
Absolutely. And a few days back, Nandita, the management was on CNBC TV 18. They spoke about the order inflows, the robustness of the orders. Obviously, in terms of execution, there is one risk because their supplies are getting disrupted because of the war in Israel and Russia, because many raw materials come in from these two nations. So order winning is not an issue. Execution, how much will they be able to do in the near term really matters on these two countries and their output and exports to BEL. So let's see. But as of now, the company is in a sweet spot. More importantly, when the elections are nearing, they also get a lot of EVM orders from the government, which will help them in the shorter term.
Well, of course, these defense stocks are in a sweet spot, and so is the market, at least, going by what we saw on the screen. We are on a sweet spot around that 21,500 mark, but let's not forget it's expiry week. So we could see some bit of volatility, and let's hope we don't replicate the kind of volatility we saw on Friday. But going forward, of course, we'll see, because, Wall Street will also open up for trading today after the Christmas holiday as well. But with that, we've come to the end of this edition of Closing Bell. If you have any comments, leave them in the comment section below, and come back and join us for the markets tomorrow at 8:30 AM with all the stocks that have been focused and also your stock related queries. But for now, it's a goodbye from me and Yatin. Thanks a lot for tuning in. Stay tuned to Money Control for all your other news and updates.